Good morning. Today is the 5th of August 2016, Friday, finally. Got on this trade here. The thought rationale behind it is I noticed this candle right here, this green one, broke out. Let's see if I can, need to, so this candle broke out right here and just couldn't penetrate, couldn't close, so I started fading the move. Um, as you can see, it got in at 41.98, so which is about, I guess right there. So let's see, price level. So got in right there. So now, uh, let's see if 8 o'clock is fixing to roll in here. As you can see, it's making green, red, green, red, green, red, and if my study's right, I should get 2 bars here, right? But we'll see. It already made it down there actually, and didn't quite pan out here. So this might get sold. Let me see. So no, is 82. Okay, so I'm hopeful that this is going to be a 2 bar momentum move, especially being an 8 o'clock right now. But I'll go ahead and move my stop here in case that doesn't pan out. Um, then that means I'm stuck in this consolidation, and therefore it's a win-win trade right now. It's my first trade. I guess I'll be shocked if I get it the first time. That hardly ever happens. Anyways, right now, let's see here. We might be able to lock in some profit here. Okay, I'll move it just one tick above that high, 92. So at least we can get something. Let's see, 98. Let's see, below this one, 79. So I missed it by a tick here. Okay. Well, I'm already in a trade. Maybe I can lock in a little bit more now. I'll just put it there just in case. All right, and there you go. One trade. That's all I needed. Anyways, I guess I'm done for today. Took advantage of that opening drive. I just happened to be here at the right time, I guess, and I explained my rationale. So hopefully y'all have a good weekend. I think I'm gonna spend some time with the kids because this is their last weekend before they go back to school. So oh yes, so let me show you the results of this study. I'll be right back. Okay, so before proceeding with this explanation here, please read my disclosure. I am not making any investment or trading advice. This is purely for entertainment and or educational purpose only. How you perceive this, I'll leave it up to you. So if you missed my last video, just you could go back and study those. So basically, this is a collection of a 10-minute open, high, low, close bars. And within the spreadsheet, what I was doing is I was trying to study bar patterns or price movement. So basically, in a nutshell, this is a Momo type trade, like a momentum type trade, where you'll have a 2 bar patterns in a row or a 3 bar patterns in a row. And really, all I was doing is trying to count it. So as you can see, think I already corrected most of the mistakes from the last video, because like I said, I was just getting started. From the previous, so this is the previous bar, and then 10 minutes later that's the next bar. And as you can see, this one is consolidating because you have an up down up down up down type formation, and suddenly it breaks out is what it looks like. It goes up one more time and suddenly you get an up move. So this column here would trigger a 1 every time it sees that pattern, and same goes for if it sees 2 down bars in a row. So this is a 2-bar pattern. So hopefully that makes sense. Alright, so this column here is it measures the range for that particular bar, which is this right here. And so this column here, if it detects a 2-bar pattern, what is the range of I think this was a pullback. So basically this bar forms, it measures the high and the low of this future bar, and then it calculates that amount, so which is this one right here. And then same goes for the red one. How this is important to me is because if I do catch the Momo trend, you know, I'll leave it to your to your imagination, but it helps me understand pullbacks, where to place my stops, and where to, pretty much if you try to get in on the future bar, when to buy or when to get in if you're getting into the if you try to catch the second bar movement. And as you can see, this calculation right here is this 2-bar patterns out of all the samples, which is 1,462, it occurred 90% of the time is what I summed up to be. So basically this is the sum of all the ones. It added up all this ones. It takes this value here divided by 2, because you're looking at paired amount of data, and then you do the statistical distribution, which is about 90%. And I think I was cleaning the video up because I put 0 where this 13 and 6 would be, so it doesn't, it cleans up the data. So where it's should put 1 there, I just put 0. So basically what I'm trying to do here, and it's what I'm trying to convince myself, is that there's no correlation between the past, so it'll just start over. So basically every 6 a.m. would be a 0 pattern or a 0 number, just because it has no relation to what happened from 1 o'clock to 6, because it's obvious that the Globex session happened, so this will never occur. In any event, so I summed all of that and I did all the math. I calculated the range for every time it triggers a 1, and then initially I was really studying the stops. Where should I put my stop here? So all those where you see once, it gets computed over here, and the average, as you can see, is about 8 ticks, and the maximum is 87, which I currently do not believe. I think maybe this is because of you get Wednesdays rolled into here, and also I did not account for the contract rollover. So there is potential that because of the contract rollover, there's a difference in price, that spread is very thick. So that's why I don't believe this number as well, because this one's just looking for the maximum value. But I believe I zeroed out I zero some of these out, so it shouldn't calculate anything here. And like I said, I haven't really looked at I haven't really paid attention closely to all of this, because what I did is I wrote the equation on the very top of this spreadsheet, and I just kind of dragged it down, so it just copies all the equation from the previous cell. And so having said that, I did the same thing for the 3-bar pattern. So basically it calculates the previous bar, which is the second bar, and then if you try to get in, and if it's a Momo trade, what are the statistical chance of pullbacks, right? And I just call it risk for stops. And same goes for this one. The reason why I did this is because I'm interested where the spread is going to be. So what I did is all these values greater than 0 penny, I did a distribution between a specific range, which what you see above. So from 0 to 5 cents, 5 cents to 10, 10 to 15, goes on and on until it goes to 50, right? And there is a pattern. So the pattern is, as you can see, anything anything that's a momentum drive, the most distribution ranges from 5 to 10 ticks pullback, right? So as you can see, if you look at the green and the up arrow, because this is the combination of both, there's a 16, almost 17% distribution, that more likely that if it pulls back, it'll go up to 10 cents, and then you have an 11% chance. I mean, this doesn't total to 100%, because as you can see, that's the only thing I really care about. Actually, if you sum all of that, it's about 47% total. So the other 50% is when it's not trending, or it doesn't form the formation. So you only have to look at the 2-bar formation that I was looking for. So so if you look at this range, if it does pull back, then there's a good chance that it'll go from anywhere from a penny all the way to 15 cents, because as you can see, it dramatically drops out, past 16 ticks. It just drops out, right? From something double digit to a single one. So that one, the likelihood of these are even occurring at a 46% chance. These are your top most pullback. And for a 3-bar pattern, same goes, the same deal. These are distribution I allotted to, and these are the numbers, right? So anyways, so the question is well, how do you know a Momo pattern? Well, that answer right there is really a screen time. Once you get to a certain degree of screen time, then you'll understand really what's how that could be a 2nd-bar pattern, or a 3rd-bar pattern. Really, screen time would dictate that. And if you combine these types of knowledge with tape reading, for instance, or the tape reading, and mainly really for me is most important part, and that's how and also chart patterns. Like I said, screen time would would definitely help you out, right? So let's put this to a test here. As I'm talking here, I just kind of got curious. So so let's do this one. That's why the reason why I took this trade, because I knew that I can get 2 bars out of that trade, and sure enough, that's what Bank said over here, about 20 ticks. So what I'm trying to show on that spreadsheet, is that it'll pull back, but anywhere from 0 to 15 cents. So this low right here is 41.82. Let's see, hold on, let's pull out a calculator. I know this is simple math, but just a proof of concept here. 41.82 is that low, 41.82. So if I subtract that by this high of 41.91, so it says 9 cents. And guess what that distribution is? It has a high probability that it'll just pull back about anywhere from 0 to 10 cents, right? So let's just I'm just gonna scroll really fast and pick somewhere around the 8 to 1 o'clock, and see if this thing holds true. So let's see. Oops. Let's just see. I'm just curious, because this came from these data sets. So okay, so let's look at this one right here. 2-bar patterns, right? So low, let's go pull the calculator again. Let's see, where's that magic? Here we go. Okay, so the low of this one is 46.78. So 46.78. I'm gonna subtract it by, oh, you can't even see that value. Let's see. Sorry about that. So where I'm reading for is these open, high, low, closes. So let's clear this again. Okay, so that low is 46.78. 46.78 minus the high of this one is 46.84. 6 cents. Voila. Where does that fall to? Right here. So that's another one high. So we picked on the green one, I mean the red one. So let's go for the green. For instance, okay, so this guy right here, right? So this one made a high of actually I'd like to pick on like a momentum, like really strong candles. Oh, I guess this is good enough right here for now. So here I got 46.62. So I'm going to clear this one. 46.62 minus the low of the next bar. Low is 46.53. You got 9 cents. There it is, right? So, but like I said, how do you recognize these things, or how do you use it towards your advantage? Well, you know, I'm certainly not here to I'm not here to give you fish so you can survive for one day. I would like to encourage you to grow the ideas. Like I said, I think I mentioned on my last video that um, you know, I'm here to collaborate, and how deep you want to go in the rabbit hole is certainly it can go infinite. So anyways, I think that's it for me today. I just wanted to share with you the studies that I've done. I did the same similar thing for the daily, because I was looking at the daily here, and I was trying to calculate each of the pullbacks. So this one forms a bar. By the way, on a daily, uh, it's really a 50-50 chance. I think I only did 82 or like 92 day sample. Not enough data at the moment. I don't have, unfortunately, I can't get that kind of data for a continuous value. So I did it for the daily, and it's a 50-50 shot. The 2-bar formation is a 50-50 distribution, so it's almost like a casino bet. So anyways, but like I said, you know, you spend enough time doing this, um, you know, I guarantee you there's going to be a light bulb moment. So, and hopefully, you know, what I'm presenting here is certainly would get you closer to that moment. So, anyways, hope y'all have a good one. I think this is probably my best trade today, one and done. This is one of those unicorn moments. Don't get these. I don't get them as much, but when I do, I try to take advantage of it. So, anyways, y'all have a good one. Have a great weekend, and I'll see you on the next video. Take care.